The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a extra special version of the Power Trading Hour. What makes it extra special? I'm here. That's what makes it special. Why do you even ask? Anyway, always a pleasure to join you from the headquarters of Technical Trading and Investing, TFNN.com. And we will have a good time today, even though we're kind of in a choppy market here, but not unforeseeable. We are off 7 points on the S&P cash today, just a little over 2 billion shares, so a little bit better volume than yesterday. But my guess is that we close a few points down today, closed a few points up yesterday. It will be about earnings starting after the bell tomorrow night. It will be about Ben Bernanke's comments tomorrow. So we'll have an interesting day, but it is going to be probably another 24 hours before we start seeing action in this marketplace. Especially it is options expiration, and it looks like a lot of action has been put into bringing these stocks flat into expiration Friday this week. So what do we have going on in the markets besides that? We've got, a little bit of pop. We did, I think we're probably going to close, it looks like about 5 points down today. The gold's up to $12.90, up $6, almost $7. We've got platinum pretty much flat for the day. And, of course, a lot of the other stuff we're looking at is gone flat, too. Crude, 105.94, which is off of like 38 cents. We've got some other movement, but for the most part, a pretty flat market as we speak. We've got silver up 10 cents, just a hair under $20 at 19.94. But other than that, what can we really say? Dollar index is off 47 cents as they continue to try to keep this thing under that $84 level. It broke above with a volume. It's pulled back down on Bernanke's comments from last week. My question is whether or not can they keep the dollar that really wants to go higher down here. And, he's going to have a lot more opportunity to jawbone tomorrow. To this point, they've done absolutely nothing. And the question is whether or not he's going to come out and mix his metaphors once again tomorrow. So what else do we have moving in the marketplace? Kind of interesting. Wanted to look at it fairly quickly. Wanted to look at Boeing. We pretty much have a good idea that the fire on Friday in the 787 Dreamliner, got to find out and call Boeing and find out when mine is actually going to be delivered. I'm going to have to reinforce that runway over at Clearwater International to get my plane on there. But, it's just so fuel efficient because I'm going to have to get rid of my 777 over there. So anyway, what do we have? It looks like NiCad batteries once again are the problem, but of course it wasn't with anything that Boeing made. It was with an emergency transponder in the tail of the plane. But I don't know if a lot of people just remember how many times that we've had lithium-ion batteries burst into flames. Most people don't remember all the ones in Apple's iPhones that did early on, but they have a lot of problems with pressure differentials and temperature differential changes, and it continues to be an issue. But this wasn't something. This is something they bought from another company. But all these lithium-ion batteries have their own problems, mostly as a byproduct of charging and discharging. They create oxygen. Of course, oxygen, highly flammable. If you remember Apollo 8, not the kind of thing that you want to have in a sealed container. and we'll continue to see it. But, this thing's pretty much fully recovered from its huge day on Friday, but back to its lighter volume. Looks like this thing wants to go to 108.15 at least one more time and test that high. So other stocks that we have moving out here today, X1, XONE, the 3D company that I've been warning about over the last few days, had a downgrade, and that was enough to push this thing back. It looks like it wants about $50 for the first support area. Of course, a great company. They have some great products, and they have $20 million in sales, or they did at least last quarter. So the question is, are they really going to scale that quickly, especially in an environment where the world is pulling back? I'd love to see this thing back in the $20 range, where I think is where this thing needs to go up and pick it up for a long-term hold. The downside is they might have destroyed the stock for investors by running it all up on nothing. And of course, 3/4 of the shares are not on the market, but will become available in the first week of September. And of course, a high short interest rate out here. It's paying off for them today. Other stocks of interest that we had moving. Let me see if I can actually find them, because I wanted to actually look at them. We've got gold up 5%. Take a quick look at that. GOLD, nice little pop up here from yesterday. Most of these gold stocks look like they are in a lower trading range. I'd love to see these things one more time come back down at a lower low and test these lower lows one more time before this thing takes off. It's probably 50-50 that it does, but being gold what it is, I'd love it to wash out people just one more time before it really starts getting moving. Baidu's up $3.60. Let's call it that. BIDU. And this thing is back and filling its gap. This gap came down on earnings on the 4th of February on a massive volume of 17.6 million shares. We are up here today with about 7.4 million shares, but really have never got anything compared to the energy down. This thing is kind of starting to roll back down to that level, but probably not going to pull this as a short today, but maybe Monday, Tuesday next week. I'm looking for this thing to start retreating. And see what else out here. Kind of interesting. I think it's QUIH, isn't it? Is it Q? I'll think of it for a second. The other one in China out here. To see if I have it. QIHU maybe. Yeah, that's it. Huayu 360. Of course, this thing broke above its previous highs, but really didn't do it with significant volume of basically just slightly more than what we had before. Started seeing some volume on Friday. And, of course, this thing is pulling back on fairly decent volume. The one thing that's never been answered for these Chinese companies and always made me worried is that they are not disclosing their full books, and that has never been settled. So both Baidu and I guess it's Huayu 360 always have to look at these with a very jaundiced eye and know that any day we could find out these things were steaming piles of lies in the stock world, which is probably not too uncommon, but they still continue to not give the full set of books to the NASDAQ and to the NYSE and full disclosure. We'll have to see how that pans out. My guess is one day these things are going to be giant pockets of air and come down very, very fast when the true set of books is actually published. Anyway, we're looking at Huayu and Baidu. Both of these a little suspicious up here. Other stocks of interest is Bed Bath & Beyond. I actually went to Bed Bath & Beyond on Sunday, and kind of interesting. I was very interested to see the kind of traffic they had in there on a nice day in Florida, and actually a little bit more traffic than I expected. And just taking a pan that I've had for about 5 years that had a lifetime warranty. They didn't give me any grief. Very nice. I'll probably be going back again. Of course, they have about 5 million things. This thing is coming off, but without a volume today. This did break out above that high 71s, low 72 level, and did it with some fairly good volume, 2.7 million shares on the 9th when this thing really took off, but it's going sideways. Probably going to come back into that $72 level. If it does with light volume, this is a legitimate breakout. And I have to say that the store was very entertaining this weekend. And I was glad I got a free pan because the all-clad pan I had was $140 by itself. Not wrong, much to go wrong with a pan, but I think all that nice Silverstone or whatever is the surface on it in my eggs probably wasn't too healthy for me. Other stocks of interest out here moving, let's go look at the positive side, is Yahoo. Well, actually, how did I do that? There we go. On the upside, we've got MU that's up 2%, but this thing still bouncing around. Looks like it wants to come down to the 11 level. And, we looked at Baidu and gold. See if there's anything else out here. CLAC, we'll take a look at that real quickly. KLAC. We've got, this thing, it did break out. It did it with extremely light volume. Looks like this thing is getting ready to pull back. We had our last major high out here at $57.97 on January 25th. Broke out on that on the 10th, and 2.7 million shares, 2.2 million shares, 1.9 million shares, 700,000. Not a lot of juice out here on these breakouts, but we'll be back in just a minute. In the meantime, give me a call, 877-927-6648. That's 877-927-6648.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we rejoin the show, already in progress over most of this station, we've got the Coca-Cola Company coming out with earnings this morning, disappointing and blaming it on the rain. I was trying to think of the song. Is it Blame It on Rio? Blame It on the Night? There's some Blame It song I was thinking would be great to come back in from the break on. But we are down with significant volume. And, of course, the last couple of major lows out here were around 24, 26 million shares. We've easily got that already today. So I'm going to figure off that we come down to at least the 38.97 level, which is the June 20th low. Once you're past that, pretty decent support would take you maybe back down to this break level of about 37. Of course, they're saying that the monsoons in Asia, that the rain over the 4th of July, blame it on the rain from Milli Vanilli. Maybe we'll have that when we come back. Talk about a bunch of frauds. One guy killed himself. Anyway, Disco Steve, our engineer, had to actually do that. But Milli Vanilli, the frauds, and I hope they had to give back all their money. I hate these people that lip sync everything, can't even sing. Maybe that's why I dislike disco music so much. But we'll try to get that horrible Milli Vanilli, Vanilla Ice song. It's hard to tell all those guys apart. They were so horrible. Anyway, as we get back to Coca-Cola, you've got that this kind of volume today does open up a huge pullback. You do have a fairly large volume. If you go back the last time this did have monstrous volume, was 100 million shares on the 21st of September from last year. The low of day that day was 37.88. So we could certainly come back in that level. But interesting. But I think what the thing that we need to take away from this is just how much these multinationals are blaming two things, because this isn't the first company to do so. One, the stronger dollar over the last few months, and the other one is a recession globally. The one place that didn't really pull back was the United States. but the rest of the world was seeing at least standard weakness. They were saying that they thought by the first quarter of next year that weakness would be over, but that the weakness would probably at least extend through the end of the year. Anyway, Coca-Cola, one of those stocks that seems just overpriced no matter when you look at it, mostly because people like to buy it thinking that at least it's a company that isn't going to go out of business and it pays a good dividend. Speaking of earnings this week, we've got a lot of stuff going on. This market is kind of probably locked until we heard from Ben Bernanke. Then it's going to go into the lock. We're waiting for stocks like eBay tomorrow night, Intel, International Business Machines, I think in the morning tomorrow. And what else do we have? Mattel, SanDisk, and St. Jude Medical. Abbott Laboratories also, Bank of America, I think in the morning also. So we've got a host of stocks in the morning. I don't think that they're going to move the market as much as the stocks after the bell. I'm looking for International Business Machines to probably come in line and probably sell off anyway. This thing certainly looks like it wants to go back down to its previous lows. So let me bring that one up. Nice little doji out here in the gap, but certainly looks like 187 to 188 is still open. I think we're probably going to see some test of that yet again on these earnings over the next few days. See, that's pretty much it. We've got, I need to look forward, but Wednesday, Thursday, even a couple of stocks I think reporting on Friday are really going to make a big difference in this market. But I think probably going to see this market go flat right after the opening, 10:30, and then we're going to be waiting for Bernanke, and I believe that's starting at 10:30 and running through about 1 o'clock, at which time I think the market's really going to have to decide whether Ben's actually going to taper. He's not going to taper. And from last week, you have to make every indication that he's saying that there is considerable weakness in the United States and the rest of the world, and he sees nothing to do and no kind of tapering of any significance, at least until next year. So we'll be back in a minute. Make sure and give me a call, 877-927-6648. That's 877-927-6648. I look forward to your call.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Gotta blame it on something. Gotta blame it on something. Gotta blame it on something. Blame it on the rain that was falling. Blame it on the stars that shine at night. Whatever you do, don't put the blame on you. Blame it on the rain. Yeah.
Well, maybe there's a moral to the story. Don't blame it on the rain. That's actually a very good intro. You have to use that tonight or later. But they are blaming it on the rain, at least at Coca-Cola. But probably a parable to be used in that whole fiasco of Milli Vanilli, and that is do not try to cheat the musician that is actually singing the song when you have two goofballs that are out there for, I don't know, some kind of strange eyeball appeal, because the musician will rat you out in a second. And they did, and they had to give a lot of their money back because those guys didn't sing a lick. And, of course, one of them ended up committing suicide. Just a horrible thing. But I guess you have to always know that if you lie, it will eventually come back to haunt you. We're going to look at some stocks out here moving in the marketplace and see how they are working out today. Seeing ones, I wanted to look at First Solar. This thing had been coming back up to its high volume gap down day. Kind of got into it a little bit today. But if there's some setting up for an ABC down, this looked like one potentially that could. And when we look at this, it's done basically a 60% retrace of it. And, you just a one-to-one would take you to about $33. This is a potentially a big ABC down. Most likely this thing is going to head back down to the $40.46 level. And the reason is that Germany continues to wind down its solar cell business incentives. And short of China now, which most of these things are already made in China, and they really don't make any profit. Going to be a continuous issue out here. But $40.46 looks pretty good, and you have the possibility of a $33 low out here. This thing just has not been coming up with any kind of volume. Would suggest that you are at the gap on light volume against a very heavy volume. Let me zoom in here for you, for those that are looking at home. But you came down with what? Almost 14 million shares. We're back into this thing at about 6 million shares. You've got about a 60% retrace. It'd be hard for me to not say right here that you're getting every indication that this thing is setting up an ABC down. Let's see what else we had. IVV, which is the iShares S&P 500 fund. We're looking at some of these funds out here. They've gotten right up and kissed the highs, but haven't penetrated those highs just yet. We've got about 70 cents, but it looks like it's kind of pulling off a little bit, but on extremely light volume today, so no big surprise. But I'm looking for that 169.93 to be broken over the next couple of trading days, probably tomorrow or the next day, and we're going to get a good indication. But you've got about 10 million shares for the previous high on that one, and just doesn't look like there's a whole lot to it. In the housing market, most of the housing stocks, like as we went through them yesterday, are pulling back fairly significantly, and we continue to see a lot of light volume tries in some stocks. This is probably the only one in the housing sector that really seems to be holding up at its highs, albeit with no volume. The last major high for Zillow, 63.76, 1.3 million shares. Yesterday we had 730,000 shares. And today probably going to come in that same level, but certainly pulling back off. A close below 63.76 would be a pretty good sell signal on this thing. And there's a high volume move right around $57. Certainly looks like you could get back into that area over the next few days. If this thing does decide to roll over. Someone was asking me in an email about what Gartley's and what they're looking for. I understand that it is kind of a challenging subject. I've been showing Sony as the example of a great Gartley, and probably not going to make a lot of money off of it, and I'm not trading it. But as we've looked through some of the Gartley patterns, this is pretty much everything I like to see in one. And when we talk about it, I'll probably get in a little deep in the weeds here, but I wanted to cover it today. The idea is that you have basically 5 points, X, A, B, C, D. After the distance price differential between the X and the A point, you'd like to see pull back somewhere, and that means the B point, about 65% of the X to A point. Maybe a little more, but that'd be almost perfect. And we basically had a 63% retrace in Sony up to the $21.60 high on June 18th, off that $18.59 low on June 6th. So you've got that ratio going for you, which is pretty close to the 618, which is what I like. You have almost the same thing from the B to C leg back down. If you look at the A to B price point, 65% of that down would be your low, which is the C point on $19.64, and we did hit that on June 24th. Now, then you get this very, 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 very light volume C to D leg, and that's exactly what you want. The question you want to ask is, as it goes over the B point, what is the volume? In this case, the B point was 4.5 million shares. When this thing hopped over it, you had 1.6 million shares, 1 million shares, 1.2 million shares yesterday, and 1.1 million shares today. Just not a whole lot of interest in coming back in here. Not a lot of interest from shorts to be squozing. And when you're actually looking at price and volume moves and the power law vector indicator, a very good example of what we're looking for here. That is, you come down with heavy volume or energy. In this case, the power law vector indicator ratio is showing a 6 on the way down. When you go over to the C to D leg, it's showing a 2.4 on the way up. That's exactly what you're looking for, something in the neighborhood of half of the original X to A leg down. And these are nothing more than ratios that consider time, price, and volume. It is a cheat sheet, but if you look down below, you'll see that there just isn't any kind of volume to really speak of for the last 15, 20 days. Pretty much since the C point out here, there just hasn't been a lot of action. And whether or not this plays out, this is a great example. We continue to give them here at TFNN. We talked about some of the other examples that actually have paid off. But really, if you can find this pattern, it looks very much like a butterfly or sometimes even more like a bow tie. And, you know, maybe it's a little skewed. Maybe someone didn't tie it just 100% correctly because, of course, the C point is going to be higher than the A point. But I really like these that have more kind of an A, B, C, D feel to them up to the D point than ones that have a huge retracement and the C point comes back to just barely above the A point. I know some technical analysts basically have extremely wide parameters for what they'll accept for Gartley patterns. Over time and over a year before we released the program, every day I was going through these Gartley patterns. And for one thing I can tell you from looking at, 5 to 10 of these things every single day over a year is that the closer that they are to this kind of pattern that have symmetry in both time and basically the B point isn't challenging the X point and the C point isn't challenging the A point. You get kind of that nice ABC move back up to the D point and the volume really falls out in that C to D leg, which you can really see with the power law vector indicator numbers. Even the A to B leg had far more energy than the C to D leg. And, of course, the X to A leg down, on extreme volume, really. So exactly what we're looking for out here in a Gartley pattern, and I'll call it a teachable moment. So again, you can always give me a call at 877-927-6648. That's 877-927-6648. And I appreciate your call, even though I know that a lot of people listen to this show later at night and delayed. You can always give me a call. But we're going to look at a few others. Anyway, a good example of a Gartley formation, even though I'm probably not going to trade it because there just wasn't enough money in the thing. The SMHs, really looking at these things because they are at the high, and they're at the high with no volume. We're looking at 5.1 million shares last time, and if my volume is correct again, we're pressing those at 1 million shares today. So we've got a fairly decent move out here as we challenge these highs. The energy, very light in these semi-stocks, but of course that could change in a blink as we get Intel numbers out after the bell tomorrow. Also SanDisk, some of these others. So we could see some volume come in if the numbers are better. I suspect they're just going to be in line, and maybe they tuck back in, and we probably get a chance at them next week to the short side if no volume comes in. Volume comes in, then we'll probably wait for these to pull back to this 39.30 level, 39.50 level, somewhere in there for that. And, maybe this thing has made a huge ABC structure on the way up also. In fact, it would be fairly large on the SMHs. So I'll have to keep an eye on those. Other stocks of interest out here, trying to remember, Facebook. We talked about Facebook being an excellent example of confluence levels. So let's go back and look at retracements. And this is exactly what I was talking about last week. And this is going to be another teachable moment here at TFNN. the headquarters for technical trading and investing. And that is just a perfect setup for Confluence. Confluence is when two different retracement levels come together. And in this case, we start off with the June 6th low as the focus number. And we look at the May 3rd high at 2907 as the first Fibonacci retracement level we look at, and the second one, the January 28th high at 3251. So this sets up a very narrow range if we go between the 381 and the 618 of the two moves, setting up a very, very stiff level of resistance. Let me zoom in on that just a little bit more. $26.43 to $26.63, is that right? And that really sets up. We spiked through that for a little bit, but we're going to have a nice little doji out here today. If you were thinking about shorting Facebook, I dislike it in the fact that it's during expiration week. But if we started seeing some kind of weakness out here, this thing looks like it has a setup to at least come back to about 2471 in a heartbeat, and very good chance this thing is setting up the ABC to come take out the lows. So we look at this, 1-to-1 would take it to $20.35, and you probably even have lower lows setting up. But let's see, let's go back here and look at that. 2907 to 2267. 2675, the June 16th high, which is today, of course. Oh, yeah, today. But no volume, nice little doji out here, right at the confluence levels. And if you wanted to go back through Tom's book on confluence levels, this would be an excellent chart to actually look at it. Also, so far, the energy is not all that exciting on the way back down. If you look at my power law vector indicator number, you had a 1.6 number on the way down, 16 on the way down, 11 on the way back up so far. So it's not like the volume is really pouring in, and you've got excellent setup here for that number. And what else do you have? A very narrow margin of error. You could probably set your stop up here at 26.75 if we continue to close below that 26.63. This thing should not close back above that again. So if you're interested in confluence levels, which are very good in the kind of market that we're working at, make sure to read Tom's book yet again today and look at this example out here, because there's a lot of them in this marketplace. And this is a prime example, just like Sony is a prime example of setting up a GARP. Anyway, we shall be back in this two shakes of a lamb's tail, as they say.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more.
Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
This is why you don't let anybody that's still wrapped in the horrible 80s and bad disco music anywhere close to picking up music of any kind. It's just horrifically bad. Just horrifically bad. Cut me, do I not leave? Anyway, hopefully it's fading out, and I'm going to have to chase it down the street now. Okay. Oh, boy. Anyway, we've got a couple of minutes here to finish up. Not a big surprise that this market is headed out sideways. It is what it is, and that is everybody waiting for earnings and waiting for the Fed president to blabber on. There's just not a lot out here to really start, chasing a lot of the market around with. But let's take a quick look at how the day is wrapping up. That is, we're off 6.5 points. We were up, 3 points yesterday. I suspect we're going to end up maybe 3 points down today or flat or something like that. But just 2.3 billion shares. Very light volume today. Just a little lighter volume yesterday. So we're starting to see that seasonal Monday and Friday volume very weak, and most of the trading coming in on Tuesday, Wednesday, Thursday. But just light volume up, light volume down. Probably best to wait until we get a signal in the marketplace to really start talking about doing something. But, just when we look at these indexes, of course, with light volume trading in the general market, you end up having the exact same issues for the rest. In the last few moments, we were looking at a few stocks out here that are kind of rolling over. Disney, of course, had some more movie bombs out here. This thing's rolled over a little bit. And again, volume not all that horrific just yet. But certainly energy on the last leg up was just a little lighter than the leg down that started on May 16th and ended on June 6th down here at 62.04. But for the most part, looking at a consolidation range in these higher levels that you're probably not going to get a lot out of. And I wanted to see if there was anything else. We looked at SMH's UYG. This is the ProShares Ultra Financials. We looked at some of the financials again. We've got earnings in the morning for, Bank of America. Oh, probably ought to look at that. But at least the ProShares Ultra Financials, UYG, are going to be fairly interesting because we're up here with 350,000 shares. We did a little under 600,000 shares last time at 102.56, which is the high in the UYG on May 22nd. But, a lot of energy back. Could be a lot of short covering out here. But we could roll over fairly easily or break out on some prizes. But I think a lot of these have already started getting most of their run-up already over. I wanted to think what else we had here. Pet M, which is PetSmart, is another one up here at this highs. Extremely light volume. Again, PETM. And, of course, I'm spending a lot of money at those pet stores these days. But the September 10th up here at 72.75, 4.1 million shares. We're into that with 1.1 million shares yesterday. About 600,000 shares, a little more so far today. And rotating back. So this is actually a valid sell signal line. Anyway, we'll see you tomorrow. Same bat channel, same bat time. Reminding you, do not play leapfrog with a unicorn.